Alright, it's June 25th, and I definitely have to make a video today. It was a huge update. Very green Friday, like we were hoping for yesterday. So I reduced my margin a little bit. I'm going to show you the entire account as usual, since this is supposed to be the Friday update, but you're going to see this on a Saturday or probably later. And then I want to talk about some like Google Trends. So I don't know if you guys ever played around with Google Trends, but let's see if we can draw some conclusions about some of the terms that I'm going to look up. So first, as we go into the account, you're going to see the daily performance, and then I'm going to take you through the account. You can see that I'm a little bit over 180,000, almost 181 actually. And I'm going to do relative performance to the market. But before that, I'm going to show you all the positions, starting with the options positions here. I've opened some new positions recently. I'm going to scroll down really quickly. You can feel free to pause your video player at any moment to try to figure out the exact position. You can see all information in this little box that you might need. So one thing you'll notice is that the equity positions are now only like 7. And this one doesn't really count, did it? Because it's only 10 shares just I can't even buy any more shares of these. They're now just traded over the counter, and I can only sell them. So that's the answer to what would happen if the Chinese ADRs got delisted. In fact, before I go through the equity positions, let's take a look at that since it's a little bit of a urgent matter. It did rally today, but it's a little bit off aftermarket. No big deal. And my position is valued at $30. So had I actually invested a ton of money into this back when I bought a few, just for as an example, I'd be up 67% on the position. That's kind of crazy. And in fact, I'd be up a lot more before the market closed. So anyways, so this is what happens. It says it here, fractional shares are currently positions closing only for DDY. So DDY is the new symbol. So DD got, they released their NYSE ticker, and they added a Y, and usually they add a Y when it's traded over the counter. But anyway, you can only close positions. I don't know why it says it like that. The wording here is really weird, and Robinhood needs to fix this. But you can close out your position in the stock, but you cannot purchase any additional shares. It says right here. So that's what's going to happen to all the Chinese companies. So you're still going to actually own them through Robinhood. So if you have shares of JD, Alibaba, or anything else, and they get delisted, even though nobody's talking about delisting anymore, maybe we can check that out in Google Trends. But that's what's going to happen. Okay, back to the account. These are all the equities. Now I have no equities of ADRs except TD actually, those 10 shares, but I have a bunch of leaps that are 1 or 2 years out. So hopefully the delisting saga kind of closes, the issues resolve themselves, and I'm able to see some upside on them. But anyways, the equities, Apple was up 2.5%, almost $3,000 on that. Realty income was up. Main Street Capital gained 4%. I actually sold one call. I usually don't sell any calls against those positions, Main Street Capital and Realty Income, but I decided to try to raise a little bit of cash for the next downturn. So hopefully that hits, and maybe I can sell 100 shares and add to pay down some margin, really. And then a big day for Smith & Wesson. I'm guessing that has to do with some of the recent legislature that passed, but it's really not that related. I don't understand. It's not like that's going to boost their sales that much. And then Paramount was up 5%. I actually ended up getting a little bit of a gain on that call that I bought yesterday. But I also lost on the Tattooed Chef short, so it was about a wash. It was about $100 up, $100 down, so it was nothing big, nothing major. I've been tracking lithium, so these two top companies are lithium because I think there's supposed to be some kind of shortage on lithium, so on some kind of a dip, excuse me, I don't know what's going on with my voice, but some kind of a dip, I'll try to pick up some lithium stocks. Hopefully I do well on that. Okay, now next is the investing tab. So investing tab, you can see that my margins reduced a little bit at 36%. Multiply that by 2 to get the true leverage of the account. So multiplied by 2, that'd be 72% leverage. So 72% of my account is borrowed money. I'm sitting at 282 total market value, money under management here. My account's equity sorted by total return, and then you can pause and look at it if you want, and then sorted by equity. So that is the account. Now, the big topic of today has been, let's actually compare the performance. Sorry about that, I jumped ahead. Compare the performance to the S&P 500. This is the 1 week performance, up 11.07%. I think the SPY was maybe up 7. The 1 month performance plus 14, that's actually pretty huge. The 3 month performance still negative, down 5%. And the 1 year, I'm actually in the positive territory again. This is a pretty choppy session here, last year over year, which is to be expected, I guess. But in the positive 3%, so that's great. Let's take a look at the S&P 500 and see how I did versus the market. This is the day, obviously winning on the day. 1 week, I'm winning on the 1 week. The 1 month, I'm actually positive quite a bit more. 3 month, I was negative 5%. That was my worst one. S&P 500 is down 13.6% in the 3 months. 1 year, I'm positive 3%. And S&P 500 is 8.5 in the negative. So, I'm beating the S&P 500 by 11.5%. So that's not bad. I'm happy about that. So for right now, I'm doing good. Okay, a lot of you are a fan of the all-time chart, so I'm going to show you, this is my account again. I'll show you the all-time chart, but when I do this, I have to make sure I disclose that I started investing in August 28th, 2018 with this account. So it's going to look pretty flat up until that point. So I started investing somewhere around here. And so this is the performance of the account ever since. Okay. I think we are done with the account review. So next I'm going to look at some trends. And the reason I wanted to see this is because I wanted to know, what are people searching for? What's kind of have we peaked the recession fears yet? Or are we kind of in the process of peaking, or is it just ramping up? So I decided to play a little bit with Google Trends and see how the word is performing in searches. So this is it. Let me actually zoom out a little bit so you can see better. This is live. So you can see that it's definitely peaking or peaked out. June 12, June 18. Let's zoom in a little bit. So past 7 days. It looks like it's in a little bit of a downtrend. Past 30 days. It looks like it peaked on June 16. And it's a little bit down. But one thing that's useful, I think, is I want to pull out this all the way to the 5-year range so you can see relative to 2020. So in 2000, I don't know why this was so high in 2019, in the summer. I even forget what happened during that time, but why was this word so thrown around? I don't know. But this is the March 2020, high, obviously right here. So right now, we're almost at that same level of bearishness, right? If you translate this into bearishness, we're almost at that level. And I have this set on worldwide. Worldwide. It looks like Singapore is the one most worried about recession. They should be, because they're all finance industry over there. And then Ireland, same thing. United States, Australia have tons of banking, and Canada also have a lot of banking in there. So very, very capitalistic countries here. But let's go even further. So I want to see how much bearness are we experiencing right now, relative to let's say 2008. So I'm gonna go 2004 to present, And it seems like we might be at a record bearishness. People maybe, this is incomplete data, so we don't know because we kind of peaked under March, but this was close to March 2020, right? So we could be on par with the amount of search and topic discussion of recession at the crash of 2008, the great recession, or the great whatever it's called. Yeah, the Great Recession. I forget. But anyway, 2008 great financial crisis, GFC. I guess March 2020 beat it, which is understandable because it was so sharp. But then now we're approaching that same level of negativity. So what other terms should we search here? I tried searching depression, but depression is like the mental illness and it's very popular. What is this country here? I don't know if you can see it, but it's a country in Africa. Nigeria is very worried about recession worldwide. That's crazy. Since 2004. Let's go to the United States. Maybe it'll give us some interesting, better data. Okay, so in the United States, people are searching up recession way more in 2020 than during the Great Financial Crisis. And right now we could be beating that number. So really, really pessimistic sentiment out there. District of Columbia, 100%. That means they're the most bearish. Then Massachusetts, then California, New Jersey, Washington. Okay. So I guess most of the lively states, I guess, Middle America isn't that worried about recession. I don't want to say lively compared to Middle America. They're still lively. I'm saying like more densely populated areas is what I meant to say. Okay. This is United States. Let's go back to worldwide. All right. What term was I gonna search here? Let's search up the term leverage. How about that? Leverage. That's a pretty like. All right. That's interesting. So let's go to the past 90 days. Oh, look at the word leverage. It's just dropping off the cliff. Nobody wants to do anything to do with leverage right now. Oh man, it's like a 0. I don't know why these trains are pointing down to 0, but anyways, it's 9. When was leverage most popular? 2010, I guess, was a lot of speak on leverage. I wonder what other bullish indicators. How about stock popularity? How about stocks? People interested in stocks. Ooh, look at this. So I can't click on it. So stocks, March 2020. Everybody want to know about stocks, and look at this little peak here. February 2021. This is like peak mania here. It's like GME and stuff. GameStop. And look, as the term's coming down for stocks, popularity, recession was rising. So it's interesting. Nigeria, man, they come up a lot. What did I do here? Interest over time. I don't know what I did. Let's fix it. Okay. Stocks. How about that? How about we'll get rid of the recession. Let's look at some bullish indicators here. So leverage is now blue, stocks are red. How about GameStop or GME? Ooh, yeah, it was that February 21. I think it coincided with the GME thing. Yeah, I think it was. Yeah, February. Very interesting, huh? Dropped off the cliff though. Let's take a look at past 12 months. I'm sorry, we need to look at a couple years, past 5 years. There it is. Look at that, skyrocketing. That's drifting. What should we look at? GME, stocks, leverage. Let's get rid of leverage. Irrelevant. How about Bitcoin? No, no, Bitcoin. Okay, interesting. Popular as it's going down. Very interesting. Look at this spike here. Okay, let's get rid of that. I want to know more about equities. How about bonds? How interested are people in bonds? Past 5 years. How about past 12 months? Stocks, GME, bonds. Nobody wants anything. How about cash? Or gold, actually. Whoa. Crazy. But I don't know if that's an investment. Gold. Chemical element topic. Gold. Investment. Gold is an investment topic. Alright. That's much more in line here. Not very popular. Anyway, so I wanted to see like what the trends are doing, and how stocks rack up, what the recession ratio is. Like, I want to see what's on people's minds when it comes to, and I think recession has actually been in the news fairly frequently, and I think it's definitely spiking up in popularity. But one thing to note is that like during the great financial crisis, you can see that the term was actually searched for a very prolonged period of time. So just because we kind of reached a high level doesn't mean it's going to go back down just like in 2020. So we'll see. I mean, I'm still in the opinion that they were still in a bear trap. I'm sorry, in a bull trap right here, and the bear market's going to resume, but you'll never know when the bottom's going to come in. One thing that I like to think about when it comes to picking tops and bottoms is that I try not to do it. I mean, I do it for fun, right? And I maybe place a small bet or two, but you got to make sure that whatever strategy that you have, you've already figured out these scenarios ahead of time. Like, think about what you're going to do with your portfolio or account whenever your positions drop 40%, or 50%. What happens if they drop 90? Are you going to sell? When is your sell point? Like, what is your countermeasures? Are you willing to go down to zero? Are you willing to lose your entire account, right? So you have to try to answer all these questions ahead of time. Are you going to switch if, let's say, your account drops 20%? Are you going to make a move to concentrate into your highest conviction bets like Cathy Wood, or are you going to go down into a single bet? Like, try to think of what would you do in case your account drops at a certain percentage. Like, if your account drops 90%, are you still going to buy and hold forever like diamond hands? I don't know, right? You got to answer that, but I would suggest that everybody answers that ahead of time, so when the actual event happens, you already have a plan. You don't have to think about it on the spot and be influenced by the pressures of the moment. So that's my only advice. But anyways, I'm gonna play with Google Trends again. If I find something funny or worth mentioning, I'll share with you guys again. But my voice is going. I don't know why. And so I'm gonna finish the video right here. I'll try to make a couple of company videos over the weekend, maybe at least one. because I really like making those. And but yeah, if you like them too, look for it and during the weekend, and hopefully you guys enjoy it and made even more money than I did. Even though it's hard to beat today. I mean, I made like 6%, over 6%, like $11,000 or something. All right, peace out, guys. That's it for now.